When it comes to stocks, you'll often hear a lot about the S&P 500, but what exactly is it, and is it something you should even be investing in? In this video, we're going to break down the S&P 500 in a way that's simple and easy to understand. If you're new here, my name is Nick, and I'm learning how to get my money to work for me using the stock market. If you're interested in learning with me, make sure to stay tuned. The S&P 500 is basically a list of the 500 biggest, most well-known companies within the US. This includes giants like Apple, Microsoft, Google, Amazon, and Coca-Cola. When people say the stock market is up today, they're usually talking about the S&P 500. These stocks are often used as a way to gauge how the market's doing overall. You can't buy the S&P 500 directly. That's not necessarily possible. The S&P 500, again, is just a list of the 500 biggest companies. So instead, you invest in funds that copy the S&P 500. Stocks like VU or SPY invest in all the companies within the S&P 500. So when you buy one of those stocks, you invest in the overall market. So at this point, you may be wondering why people invest in the S&P 500. Well, historically, over a very long period of time, the S&P 500 has been able to return roughly 8 to 10% on your investment annually with the dividends. Returns in a single year can vary greatly, so sometimes you may see 6% instead of 8%, or you may see 12%, 13% instead of the 10%. But over decades, the average has been consistent. Plus, it spreads your investment across 500 various companies, so you're not just dealing with one stock in hopes that it'll win. Instead, you're dealing with multiple stocks, and that's called diversification. It helps you reduce your risk. If you're new to investing, or you're looking for something to invest in without having to do a lot of research, then an index fund like the S&P 500 might be for you. It's not too flashy, but it's reliable and historically proven. So that's it, nothing too complicated. Again, the S&P 500 is just a list of the 500 biggest stocks within the US. When you purchase a stock like VOO or SPY, you're investing in the 500 biggest companies within the US, a very small portion. And again, buying a stock like this will allow for you to have diversification across your portfolio and reduce your overall risk. If this video helped you understand the S&P 500 a little bit better, then make sure you like, share, and subscribe for more content like this, and I'll catch you in the next video. Take care.